All right, so this is how you're going to be able to trade break and retest profitably. So, in our mentorship, I taught you what a breakout was. A breakout is an area when price pass an area of resistance or support. But we can actually have way more probable entries if instead of entering right at the breakout, we wait for price to pass a breakout level, decide to create another area of support or resistance, and after price breaks out of a level, of a strong key level, a lot of the times a retest will happen. Now, what is a retest? So, boom. So, as we can go and see here, so support is right here. Price decided to not bounce here yet, or decided to bounce right here on the green line. So we know that this is an area of support, but we know that price decided to not break out here yet. So, if price were to go ahead and break out from this area of support, so a breakout is when price breaks a level of area or a level of support or resistance. That's what a breakout is. And the breakout is going to be the most key piece of information on these charts. Now, let's go ahead and let's see why. So, instead of entering at the breakout, so original breakout entry and trade the reversal. Gap fill. So, let me go ahead and explain this here. So instead of entering exactly up the breakout, say price broke this level of support, right? Instead of entering here, we would let price go ahead and break out. Let it break out. Boom. After price decided to go ahead and break out of this low right here, guess what would happen? Price would decide to go ahead and find another area of support somewhere. But instead of trying to predict where price is going to stop exactly, we're just going to wait for price to come back to the entry. Boom. Now, as soon as price comes back to the entry, we're going to be able to go ahead and take it right back down a lot of the times. And this is how your trade is going to go ahead and be set up. So, break and retest is going to be when price breaks out of an area of support or resistance, then comes back to the original entry and reverses to fill the original structure. So if price decided to break out of this area of support right here, right? Let's say price decided to stop right here in this green shaded box. Cool. So just like price did here, it decided to find a low and go all the way up. So this is good. A chart is going to do that over and over again. It's going to break new highs and break into lower lows. And then go back into new highs. But let's not make it confused. But boom. So, after this support were to get broken, right? Let's say price decided to stop here at this green shaded box, hypothetically. Boom. After that, the reversal will come. So, we don't take a trade here. The reason why we don't trade here is because we can get a much bigger and more probable trade. The reason why we don't enter at the breakout level, especially on options, is because you can get a much more probable trade if you catch the gap fill, reversal, and use the extra contracts. So breakouts are still useful for us to know, and use the extra contracts to hold for the breakout. So, once again, the reason why our entry wouldn't be here at this area of support is because we don't know how far it's going to go down here. This is just hypothetically. So we let the market make itself. Let the market make itself. Never forget that. Let the market make itself. Cool. So after that, you're going to go ahead and realize, cool. So market decided to go ahead and floor and came back to the entry. So a market comes back to the entry, right? Soon as market comes back, when market reverses back to the entry of a key breakout level, if it's a true level, price will reverse at the original entry, and you can catch it, and you can catch the gap fill. Almost 100% guaranteed. Okay. So, if market were to break out of this area of support, create a floor down here. Bless you. Support. Boom, support. After that, support. Let's say this break of support, right? So breakout. All right, the breakout's right here. Boom. So the reason why price is going to come up and test the original breakout entry again is because support can turn into resistance. Resistance can turn into support. Please write this down. Support can turn into resistance, and resistance can turn into support. Exactly. So after price breaks, so let's just say, so if price breaks an area of support, you're going to be looking for that. So when price breaks an area of support, you're not going to enter when price breaks that. You're going to wait for price to come back to that area of support and then take it back down. Right? Boom. Now let me show you another example. Let's just say resistance, right? So yeah, let me make sure we do understand this 100%. So once again, a breakout is a break of a level of support resistance. The reason why we don't enter as soon as price breaks an area of support or resistance is because we can get a much more probable and bigger trade if we catch the full gap reversal. And the reason, and you can use breakouts for your extra contracts. So let's say price decided to like do this. Let's say it went up a tiny bit again, and then it broke out. Boom. And I hope this makes sense right here. This is trading. This is how trading works. Just like this. So boom, support and resistance, that's it. So after price breaks an area of support, right? This is going to be, so I'm going to show you both ways. So if price breaks an area of support, right? And I showed you how to find key entries. We're going to be able to use our either daily and use the weekly or stuff like that and find the bottom zones of the candles. So that's how we're going to find the key areas of support and resistance, but we'll get more in depth than that. But boom. So support can turn to resistance, and resistance can turn to support. So after support is broken, don't enter in as soon as support gets broken. Don't enter as soon as support/resistance gets broken. Wait for a retest, then take the gap fill. Okay? Boom. So, price were to go ahead and break out from this area of support. It would fall to another area of support, right? Boom. We don't know where, we don't care. Because all we care about, as long as you know where your as long as you know where your breakout entry is, that's going to be your entry again to trade a reversal. So boom, after price breaks out of a certain place, it's going to stop somewhere. We don't know where it's going to stop. Well, we have an idea with the wick to wick system, but it's irrelevant. It doesn't really matter. Who cares? Let it stop wherever it wants to. After that, your entry is going to go ahead and be the original breakout. Wait for price to travel back to the breakout entry. So, you're always going to wait for price to travel back to the breakout entry for the highest probability trades. Okay, you're always going to wait for price to travel back to the breakout entry for the highest probable trades. Okay, so this is the original. So once price breaks this area of support here, price will travel down. We're going to wait for it to come back up to the original breakout entry. And guess what? Bless you. And since structure is already created, so you see up here, right? You see how it ping-ponged up here and came down to the green line, right? It's going to do that down here again. Over and over and over and over again. It's going to create a mini range like this, break out, retest, go down, and it's going to continue to do that forever until the end of time. You're going to be able to turn substantial amounts of money into, or a little bit into substantial amounts. Especially playing like this. Because on options, you're going to be able to buy such cheap contracts. And you're going to be able to have so much leverage. So you're going to be able to turn like a $40 contract to $200 effortlessly. And that's what we're going to be looking for. Is making sure that we're turning a little bit of money into a lot. Keeping our leverage high, but keeping our risk small. And that's why we're catching these trades. Is because they're guaranteed and they're going to be bigger moves. Compared to if you enter in at the breakout, you don't know how long it's going to go. It might not come to this support instantly. But at least if you know price comes back to the breakout entry, you know price will at least go back to where it stopped before, and that's where you get out again. And if price decides to continue and break out off of that, then that's, say you had 3 contracts, right? So you had 3 contracts right here at the entry. So, and it would look like this. Stop loss above the highs. So if price decides to show you some bearish reaction at the original breakout entry, set your stop loss a little bit above, a couple of ticks above, and take profit is going to be where price stopped at before. So for instance, price decided to go ahead and top out up here, right? You see where price decided to top out at? Up here? Boom. Price decided to top out up here. Guess where price is going to try and head down to? Right here. Price is going to try and hit here. And it's going to go for another breakout. Price is going to go down, come back up, test the entry again. And after it tests the original breakout entry, that's going to be our entry. So we wait. Go ahead. Exactly. Yep. We wait for support to turn into resistance, and we wait for resistance to turn into support. So this is the original support right here, right? We read the chart from left to right. Always read the chart from left to right. All right, always read the chart from left to right. Always, always, always. So, as we can see here, this is this key area of support, right? Boom. So, price is going to try and break out of this. Once price breaks out of this, it'll travel down. Let's say it stopped right here and went back up. We don't touch it until it goes back up to our original entry. Why? Because support can turn into resistance, and resistance can turn into support. So support right here hasn't been broken yet, but once it gets broken, boom, we wait for it to come up, and we wait for the support to turn into resistance, and then we take it back down. Just like I did up here. Let me show you this. So guess what happened here? You see this dotted line right here, right? Guess what happened? You got this, Margaret. You're a pro. You're a super quick learner. I know you're going to be able to run up a bag. Boom. Right here. Price decided to do what? Break below this key level of support, right? Okay, so what happened once price broke it? Violation. Literally violation. Price broke above it. And this is why we don't enter directly at the key level of support. It's because we see how like small this trade is once it broke it. That's only like a few ticks. But then it decided to go down all the way a few minutes later. So instead of getting in here, right, at the key level of support, so instead of getting in right here at this key level of support, wait for price to break out. Price decided to go ahead and break out, right? Stopped right here at this area of support down there. So price went from this area of support to this area of support, right? And guess where our entry was today? This is probably one of the best trades I've ever caught, and I caught this today. Guess where the entry was? Support. Support turned into? Exactly. And guess where price is going to head right back down to? Exactly. Exactly. Boom. Every single time. And you can be a millionaire just by catching this simple model. This simple model. This is from 112 to 106. That is ridiculous amounts of money. And your risk is pretty much zero. Because you know price wants to go ahead and listen to this here. It's easy. It's easy. That's going to be our entry. That's going to be how we trade break and retest. So that's going to be the short example. Let me go ahead and show you the example if price were to go ahead and long. So I hope this makes sense. So price started here at this support, right? Broke down. Made this support right here. This is why we don't trade the breakout, because we didn't know it was going to stop here. We don't know. We don't know. Even when this one gets broken, we don't know where it's going to stop. But it doesn't matter, because we're just going to wait, sit on our hands, wait for price to come back to our entry. Oh wait, price is in our entry and shorting again. Cool. Everyone's waiting for the same thing. Let's take it right back down to where it stopped. Boom. And we're going to take it right back down to where it stopped before, right? So let's say you had 5 contracts at this entry. 5 contracts at the entry, right? Let's say you took it right back down. So remember, this support right here, once it got broken, it stopped at this support. Price decided to bounce back up to this original entry, and price is going right back down to the original support again. Now, breakouts are still useful. So you can either do this. So if you're entered in 5 contracts, right? You can either close all 5 here, or you can close 4 and hold one last one for the breakout. So if you wanted to, down here at the original take profit, then you can close 4 contracts, right? And let's say price breaks this area of support that it created, right? Then you can go ahead and hold 1 contract for the breakout. Because if this contract breaks out, you're going to be able to make so much more money, even more money. And the trade is pretty much guaranteed because you already had the best entry. So this way, you're going to easily be able to turn day trades into swing trades. A day trade is holding a trade for day trade is holding a trade from 9:30 a.m. Eastern to 4 p.m. That's a day trade. A swing trade is anything over a day. It is holding any longer than a day. So, remember, market opens at 9:30 a.m. Eastern, closes at 4 p.m. Eastern. A swing trade is anything that you hold longer than a day. So a day is 9:30 a.m. Eastern to 4 p.m. Eastern. So each market session is this. So anytime you hold your contract past that, it's gonna be called the swing trade. So that's just terminology. Yeah. But yeah. But cool. So, and that's why we still know about breakouts, because you're gonna be able to make a lot of money off of that. Let's say if one contract went from here to here, you'd make ridiculous amounts of money. And if it did it once, and it's a true trend, it might just do it again. And you already got most of your bread out. Close 4 contracts, boom, you're out. Take all of your bread, and then see if that one contract wants to break out. Even if that one contract goes all the way back to your entry, which it most likely won't, you could just move that one contract like maybe somewhere here in the middle instead of all the way back to your entry, but it's still going to be up. And then just see if that breakout happens. And it's worth the probability. But you could also be completely all out if you want. Yes, but yeah, you can. But I would just look for just one at a time. One at a time. One entry at a time. One entry to take profit at a time. So price decided to break this area of support right here. And remember, we don't enter right at the breakout. Don't enter right at the breakout unless you're on futures, which you're not. Unless you're on futures, don't enter right at breakouts. Wait for a retest and take the gap fill. A gap fill meaning if price decided to break this area of support, stop at some place, right? And then the entry decided to create break and retest. The entry decided to be like, okay, I'm going to short here again at the entry. It's just going to go right back down to where it stopped before. And that's what I mean by the gap fill. So your take profit is going to be wherever price stopped and bounced before. Yeah, so this is the gap fill here. Like all of this. Exactly. Yep. A gap is an open area between support and resistance. Mm-hmm. You asked the best questions. A gap is an area between support and resistance. And that's it. So yeah. So that's going to be for the short example. Now I'm going to show you if price is going upward. Boom. So let me go ahead and save this chart here. Cool. Let me go to something that's like at all-time highs or something. Let me show you this example. This is going to make really a lot of sense. This is another trade on Mark II that was really easy. As you can see, stopped literally exactly where it needed to. Boosh! 6 points pretty much in like 2 days. This should come tomorrow. And it's that easy. But boom. Let's talk about how to find this setup though. Okay? So that's how we trade break and retest. Okay. Please pay close attention. So remember, okay. I might want to do a different pair just to make it a bit easier. Yeah, I'm going to do like this one. Okay, yeah, we're going to do like this. Okay. So, the time frames you're going to use to trade break and retest. You're going to use the monthly. You kind of need them all, I'm not going to lie. Weekly, the daily, and the 4 hour. And then you could do the 1 hour too if you want. And then yeah. But a lot of the times, no, 100% of the time. Your entry should come from either the monthly wick, day or weekly wick, or daily wick. 100% of the time, your entry should come from either the monthly wick, the weekly wick, or the daily wick. Okay. And you're pretty much just going to have to just... okay. Don't let this part confuse you. You got this, okay? Don't let this part confuse you. It's really easy. Okay. So, right now, I like to go ahead and look at the monthly candle to see the trend, right? The monthly candle a lot of the time shows you the trend. So the monthly candle a lot of the time shows you the real trend, right? So if it's red, that usually means we're in a downtrend. If it's green, that usually means we're in an uptrend. Okay, so let's say the candle is red, right? So right here is bearish, so it's red. We're going to be looking for area of supports to catch break and retest from. Okay? Right here, right? At the dotted line, right? That's current price. Price is currently at 321.16, right? Now, this is what I'm going to go ahead and do. So price is below. You see this wick right here, right? No, exactly. So what did price do once it passed this green wick? What did it do? Exactly. It broke out. Exactly. So it broke out. You got it. Trust me, you got this. It broke out right here. And remember, okay, that's a breakout. As long as we know where price originally broke out from, that could potentially be our entry. So there's a very high chance, I don't know if it happened or not already, but there's a very high chance that price, even though it dipped, price tried to come up here, and then price is going to try and fall back down. And it might not be this support, but just look for supports. So if price is in a downtrend, look for above supports. Look for previous support breaks on the monthly, weekly, and daily. That's it. Only use these three and look for wicks. So if price is in a downtrend, right, which means that this red candle, right, look for previous support breaks. So if price is underneath here and price broke this support, this is a previous support break. This is because previous, it already happened. Just look for breakouts that already happened. Look for breakout entries that already happened on the higher time frames. Now, on the monthly, weekly, and daily. Only use these for entries. And then you'll verify them on the 4-hour. But a lot of times your entries will come from here. Okay, so you're going to be looking for breakout entries that already happened. So if price is in a downtrend, the breakout entry that already happened is going to be at this red line right here, right? Possibly. So, after that, start on the monthly first and draw lines at previous breakouts. Then scale to weekly, then daily, then 4-hour. and draw lines at each breakout, at each previous breakout. So as we can see, above or below current price. No, it's not. It's confusing. But okay, so if price is underneath, right, and this breakout already happened. So cool. So instead of being like, oh man, missed the breakout, no such thing as missing. So we start off on the monthly, and you're always going to draw a line, right? Draw a line at the previous breakout that happened. So if price is underneath, you're going to want to only play breakouts that happened previously. So they're always going to be above you. And then what you're looking to do is pull it up and then take it right back down. That's going to be the goal. Okay? So you're looking for the pull back up for a short setup. So for short setups, you're looking for a pull up and then back down. So if price were to go ahead, if I was looking for a short setup here, remember we wouldn't enter at the breakout. We would wait for price to break out, do its thing, and our entry would be once price comes in contact with the breakout again. So start off on the monthly, draw your line. Then weekly, zoom out. After this, okay, what do I see here? I see this candle here, support candle, and I see another support candle right here. Let me draw a box between this wick and this wick. And then let me scale down on my smaller time frames and let me see what happens. I see a break of support right here, and I see a break of support right here. Let's see if price decided to screw around here. So now I'm going to go on my daily. Boom. Okay. So price still hasn't come in contact with this place yet. But so many key areas of support were broken here. Let me go ahead and let me drag down my entry a tiny bit closer since I see this breakout right here. Let me drag down my box and start it from the range. Cool. So I see this area of support being broken right here. So there's a support candle right here. Support candle right here. Support candle right here. Support candle in 3 different places, right? And guess what? Price said, you know what? I'm tired of this. I'm breaking out. And it did exactly that. Broke out. Now, after we've gone ahead and marked everything out on the monthly, weekly, and the daily, let's go down to our 1 hour or 4 hour and see what it looks like. 1 hour. Boom. Now, we're going to be waiting for price to try and come in contact with this area and then take it back down again. So, I'm going to scale my 4 hour here just to go, you can see everything closer here. So, now, price should most likely come in contact with this area since there's so many strong supports here. So many strong supports here. And remember, we found this using these are the bottom of the daily. Very strong supports here. And price decided to go ahead and clip. So somewhere within this zone, price should be able to run up. And then you could use your 5 minute too as well, as if you need like a super small time frame just to see things. And then a lot of the times you're going to be able to go ahead and get a test and play some break and retest. So, as you can see here, right before market close, price decided to kind of come in contact with the zone and then fall down. A lot of the times, wait for your entry. A lot of the times, especially on stock options, your entry is going to be between 9:30 a.m. Eastern and also like maybe 1 p.m. at the latest. And this is a lot of the times. A lot of the times, market's going to set up itself right in the morning and then dump. That's exactly what it did today on Dell. Market decided to instantly open at 9:30, and then decided to go ahead and be like, you know what, I'm falling. So a lot of the times, if you mark out a setup the night before, and then price action comes in contact with it at 9:30, a lot of the times your setup is going to happen. So, yeah, so we'll see what price does once it comes up here too. And then, hopefully, price should be able to come up here. Once again, remember, price already broke out originally. Broke out all the way down here, murdered itself. We want to wait for price. So price broke out right here, right? Boom, price murdered itself. Went like all the way down there. After that, doesn't matter where, but price created some level of support. After that, price decided to go ahead and see if it wants to run back to the entry. Boom. And what did it do? Ran right back to the entry at 1520 here and gave us a pretty much exact tap. Very, very, very clean tap. And price is beneath this. So, yeah. So, and a lot of the times you're going to want your entry to be played in the morning. So, if it tests like here at like the end of the market at like 15 o'clock, market closes at 16 o'clock, then a lot of the times just don't take it. Just wait. Just wait for the morning and wait for it. Price will probably retest that area again, and then it'll go ahead and price should be able to dump right back down. Yeah, it goes by. Well, yeah, but on TradingView it does. But yeah, actually it does. But 9:30 is still 9:30 no matter what. Yeah. So yeah. So 9:30, yeah, and a lot of times you're not going to be able to. A lot of times your entry is not going to be like past like 1 o'clock. Let's say like a lot of the times. So yeah, cool. So that's going to go ahead and be that. So that's how you would mark out a setup if you were looking for an entry. So I showed you how it looked for stuff that's already happened now, and that's going to be for another short setup example. Now I'm going to go ahead and show you how to find a long setup. So let me go ahead and find a... Remember, if we're looking for a long setup, we're going to be looking for a green weekly or monthly candle. Look for, so your entries for long setup will be previous areas of resistance that were broken. So, if your entry for short setups are waiting for previous areas of support to get broken and then retested, for long setups, you're waiting previous areas of resistance to be broken and then retested. So, guess what happened past here? If we're reading the candlestick chart from left to right. Boom. Price created resistance, and guess what happened one day? Poop. Shot right through it. Alright, cool. So this is the potential entry. Boom. Resistance. This is a possible entry right here. Now, remember, we start off on our monthly. And it's a green candle. So instead of it being red and we're looking for supports to get touched, we're going to be looking for resistances to get touched. So, start off on the monthly. Boom. Now let's go weekly. And remember, we're going to be looking for resistances. So there's a resistance right here, right? Cool. Let's see where else there's one. Oh, I see one right here. So resistance right here. Resistance right here. So price will probably try and stop at one of these two areas. Now, after that, let's go to the daily and check it out. Daily. See what things are looking like over here. Max support over here, and then from there I'm going to drag my box, start at the tip of the wick in the range, and drag it to like the bottom wick of the range here, which could possibly be like right here. Right here. So we know that if price doesn't break and retest, at least, let me see, there's resistance right here. So this is resistance right here, and the last resistance in the range is going to be right here. Because price decided to top wicks, and then price decided to fall down, and then it decided to get broken out later. So as you can see here, remember what we originally learned. Say right here, for example. See, when this wick got broken, guess what happened? Price decided to fall down at this wick, right? Guess what happened one day? Broke past it. So wherever price decides to fall down, that's resistance. And a lot of the time, the daily and the weekly and the monthly are going to, so just look wherever price decided to wick back from, and that's going to be how you see support and resistance. And a lot of the times you're going to see multiple of them in one area, and that's how you know your zone is right. Okay, so I know that price has a high probability to bounce between one of these resistance wicks. So there's a resistance wick right here, resistance wick here, resistance wick here, resistance wick here, and a resistance wick here. So we're looking for price to stop at one of these, and then it's going to go up, inshallah. So after you've done that on your daily, go down to your 1 hour time frame. Guess what happened today? Price decided to Goku blast, went up, went up, went up. Guess what happens as soon as price decided to break and retest? Boom. You see? Boom. So price decided to go ahead and do the break and retest. So now all we have to do is wait for price to come here again. And as we can see, if price comes here again, right, and bounces, all we have to do is make our entry right here. Our entry would be here. And we would just get out right here. Exactly. And exactly. Why? Because it's falling there. So instead of predicting where price is going to keep falling and going from, because right after this breakout, right? And you got this. But right after the breakout, price decided to just continue to keep going. So, right here. So, yeah, price decided to just keep going up. So we don't know where price decided to stop at. Where did it decide to stop? Right here. Now, all we have to do, so now price is going to stop right here, right? And eventually, you see how this wick is congruent with this wick? Price is going to try and break this out eventually. But instead of trading here from the breakout, we're going to wait for price to go ahead, top out, fall down, and hopefully, once again, boom. And that's how it's going to go. Well, realistically, it might be like this. There we go. So it might like pause for a tiny bit and then go up. But yeah, this is how it should look. And then this is your take profit. And remember, all we did was we found this entry by using our hard time frames. Remember, if you're looking to go long, you're looking for previous areas of resistance. Just put lines and draw zones in previous areas of resistance on the monthly, weekly, and the daily. So, if you're looking to go long, catch reversals off the monthly, weekly, and daily resistance wicks. Inshallah, God wills. If you're looking to go short, catch reversals off the monthly, weekly, and daily support wicks. Inshallah. And remember, a lot of the times you're going to know if you're bullish or bearish by the color of the weekly and the monthly candles, especially the daily. So right now, we're hard bullish. So I'm going to be looking for a pullback. And how do we find our entry? Look at these previous wicks. Well, we use the weekly first. Boom, tip of the wick right here. Cool. Let me scale down to the daily and make sure it looks the same. I see a tip of the wick right here, tip of the wick right here, and you're going to put a zone in between all the close tips of the wicks off the ones off the weekly. Put a tip of the wick here, 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 tip of the wick here. There's no resistance until down here. This is my last resistance all the way down here. So boom. So price is going to try its hardest to stop in this little area here. It's not going to always be to the exact tick, but it's going to try its hardest. So, yeah, and price already decided to bounce from here. But those people didn't know when their take profit was going to be. So that's why we wait for the retest. So it decided to already validate it once. Cool, just wait for price to get here again and take it right back up. Boom. Hope that makes sense. Yeah, 100%. Yeah, it's a game changer, 100%. But you got this. You got this. You got this. You really do got this. But this is the basis of trading. The basis of trading is break and retest. That's the basis of trading. And yeah, so I'm just letting you take a minute and just soak in all the info and stuff like that. So boom. That's going to go ahead and be how we find our entries and things like that. Now, and you know how to set your take profit. Your take profit is just going to be exactly where we bounced at, where we stopped at before. So your take profit is just going to be where you stopped at before. So if you're looking for a break and retest entry down here and you stopped up here, that's your take profit. Yes. Yep. Take profit is going to be exit. Exit / where you get your money. Take your money. So that's going to be a take profit. So that's where you exit and that's where you take your money. So the basis of trading is break and retest. So. Okay. Awesome. So after that, you just make sure that you measure your risk reward. On TradingView to the left, there's going to be these little tools. It's 1, 2, 3, 4, 5. 5 things down. You have these tools. These are going to be very important. Called the long position and short position tool. When you're setting up your trade, and you could also, let me show you how to find your stop loss too. You could, okay, here's how you find your stop loss. So, okay. Let's play close attention. It might look like Jamboree, but once you start doing this, it's going to be really easy. So, this is the last resistance wick right here, right? So, if price doesn't bounce here, we probably lost. So, I see a little bit of support right here. So, I'm going to put my stop loss below here. So, this last piece of support is our last hope. And that's going to be my stop loss. So look close in your zone. Mark out each and every single wick within your zone. And then your stop loss is going to be like the 1 or 2 candles that just invalidate it. So there's a lot of wicks within the zone. But if price goes below this wick, you know we would just lose. Because there's not another wick till like down here. All the way down here. And then price could potentially reverse from here instead. Which is probable. Yeah. So... yeah, it's definitely possible for price to reverse here as well, too. Because I definitely see just a few wicks here. But, yeah, it's just about waiting and seeing. Waiting for price to confirm. Waiting for price to give you your entry model. And just being patient. Sitting on your hands. Marking out each areas. And seeing how price reacts at each of these areas. And just being patient. It might look like a lot at first. Like, price, you see how price came in contact with those bottom wicks, right? That I was just talking about. right here, right? I'll make it yellow. This one, you see resistance right here. 1, 2, 3, and then stop loss like below here. Yeah. Yeah. So in this instance, yeah. In this instance, yeah. But your stop loss is just going to be above or below your entry. Yeah. Yeah. So yeah, you can just make it easy like that. But so yeah, so as you can see, price came in contact with the yellow line, and guess what? Options is really manipulated, is what makes it so easy. Market opens at 9:30. Guess what happened at 9:30? Entry. Boom. Do you know how much money this is? A lot. That's ridiculous. Like it's ridiculous. That's like 10K. That's like your whole month's worth, like the year worth of rent in one trade. It worth risking like maybe $500. This is 8 points. And that's why if you're able to time these entries, you'll just catch such ridiculous amounts of points by just being patient. Just literally being patient is all we have to do. Inshallah. Just be patient. And continue to wait, and then we just farm the downtrend and the uptrend over and over and over again. Yeah, 100%. So yeah, that's gonna be how to trade, break, and retest. And for your risk to reward ratio as well too, um, make sure you're playing for at least a 1 to 3 minimum every trade. So let's just say risk to reward ratio. So here's how you use the long position tools. These are things on TradingView too. And once again, this can be recorded and uploaded. But the long position tool, boom. Let's say you did enter right here, right? Boom, take profit. Where's here? Let's just say hypothetically. Boom, stop loss here. Okay, catch the break and retest. Boom. All right, after you catch the break and retest, take profit all the way up here. So this would have been a 1 to 18, really. So as soon as you mark out your stop loss, let's say you did put your stop loss here. Let's say stop loss was below this low right here. Right here. So I would drag this gray down because we enter at the yellow. If we know we go to the red line, boom. So this would be a 1 to 13 risk to reward ratio. So you would 13 times your money is what that means. So you would 13 times your money. Exactly. Yep. So it tells you what multiple you're going to get of your money. So this is a 13. You would 13 times your money if you hit this trade. And that's profitable. So even if you lost 13 trades, as long as you had your same risk, which you're going to be playing with similar risk each and every single time, then as long as you're hitting big chunky trades and you keep your stop loss small, you're going to be profitable, inshallah. So you just keep trying these setups, keep your stop loss relatively small, catch your big risk to reward ratio, and you'll be able to run up bands, clear all your debt, pay rent on time, buy new cars, and yeah, really take care of yourself just off trading. And it's really just about who's the most patient. So yeah. If you guys are looking for a cryptocurrency broker where you guys can trade crypto futures, altcoins, and meme coins, I recommend you guys head over to bitunix.com. You guys can either buy crypto straight up and buy your favorite coins using your card, such as Bitcoin, Ethereum, USDT, XRP, etc. You guys also have the ability to trade futures as well, where you guys can either long or short cryptos such as Bitcoin, or even trade altcoins and meme coins such as Gala USDT. So you guys have a huge variety of what you guys want to trade, and the fees are pretty low as well. On bitunix.com, they also do give you guys a welcome bonus as well, where you guys can complete some very easy steps and get some free capital which you guys can trade with. There's also tons of trading competitions that go on that you guys can earn some capital to trade from too, and you can compete against your buddies. So if you guys are looking for a new crypto broker with low fees, fast transactions, and fast withdrawals, I'd head over to bitunix.com. Link in description below. Peace.